As I look out at all these risks, I say everything else you could buy is riskier. Bitcoin is the least risk, and that's why it makes the most sense. Every intelligent person is going to run away from those stocks, away from their real estate. They're going to sell their real estate. They're going to sell their stocks. They're going to sell their gold. They're going to sell their commodities. They're going to buy Bitcoin.
Michael Saylor, thank you for coming on the Minority Mindset with me today.
Thanks for having me.
So why do you think Bitcoin is the future, and what do most people not understand about Bitcoin?
So what do I think about Bitcoin? Bitcoin's the world's first engineered monetary system. So why is it the future? Well, money is half of everything. And if you look at the history of the human race, we use seashells for money. We've used glass beads, we've used copper, we've used silver, we've used gold. And we used bales of tobacco for a while. We've used fiat currencies, thousands of them. And every one of them suffers from the same problem. They all get inflated and debased away. So thousands and thousands of empires have failed because those in charge eventually print too much money. And when the currency collapses, the economy gets ripped back to Stone Age barter. And if they're lucky, they hyperinflate and they end up with Stone Age barter. But more likely what happens is, as the empire prints more money, the purchasing power of the currency collapses. And so all of their soldiers quit and all their mercenaries quit, and they get conquered by another country, right? They lose a war, and they lose a war because they can't afford to fight the war. So, money is intrinsic to the human civilization. Inflation is also intrinsic. And Bitcoin is the first engineered monetary system. And that means that a set of engineers got together more than a decade ago, and they decided they would redesign gold to make it perfect. If God came down from heaven above and designed the perfect money, it would be an immutable ledger shared with everybody in the world and correct, and no one could cheat on it. And that ledger would have what everybody owes everybody. And there'd be a certain amount of currency. It doesn't matter how many, let's say it's 21 million coins or 2.1 quadrillion Satoshis. You'd have a certain amount of currency. You wouldn't make any more. And whenever you owed somebody money, you would pay them, and it would get updated in the ledger. And if no one could corrupt the ledger, and if everyone had a copy of the ledger and no one could cheat the ledger, and we could update that ledger instantaneously anywhere in the world, you would have perfect money. You can see gold coins are an imperfect representation. Gold bars, really imperfect. You can't send a gold bar from Africa to Asia to purchase something. So we know gold doesn't work. And all these ledgers, all the fiat currencies are imperfect ledgers. The problem is they're not shared. They're not even correct. And someone keeps changing the amount of money. And so when I double the money supply, you lose half of everything that you have if you're saving in that currency. So Bitcoin is that solution. It happens that every 10 minutes we update the ledger. It's run by software that's incorruptible. It was designed, since nobody trusted anybody, the idea behind Bitcoin is everybody runs a copy of the software. There are thousands and thousands of nodes that all run the Bitcoin software, and they all update, and they all have the same version of the truth. So Bitcoin is the closest approximation to perfect money that we've come up with. And it solves a fundamental problem, which is, how do 8 billion people on the planet trade with each other and trust each other? And how do they conserve their monetary energy over time and move it through space? And it's simply put the best way to do it. And that's why it's so significant.
So what made you take your money or your company's money? You're the CEO and founder of a publicly traded company, MicroStrategies. What was that driving factor for you to now realize this and then take $3 billion of your own money and use this to now buy Bitcoin?
Well, we started with $500 million of cash, and we were generating 0% yield on that cash. And so one of the problems is that if the inflation rate's 25% and we generate 0% yield on the cash, then we're going to lose about a quarter of the value of our currency or of our balance sheet over time, every year. And so we figured that if we kept doing this year after year after year, we were going to dwindle away our entire treasury balance. And we decided we needed to come up with some place to invest that capital, or we need to give it back to the shareholders. So we split the difference. We decided we would basically return half the capital to the shareholders, and we would invest the other half in a scarce, desirable asset. And we announced that to the market, and we studied every possible asset in the world. And we concluded that the best asset for us to invest in was the crypto asset that most resembled gold, and that was Bitcoin. So we settled upon Bitcoin as the most secure, highest integrity crypto asset and most institutionally well adopted. And the rest we announced we were going to return to the shareholders. We did a Dutch auction, and we offered to buy back $250 million of stock. At the end of the auction, we only had $60 million tendered. And so since we only had $60 million tendered, we invested the rest of the capital into Bitcoin. And that had us about $425 million invested in Bitcoin. Bitcoin started appreciating in value. Our stock started moving up. And we found over the next few quarters, we were able to issue $2.2 billion of debt at a blended interest rate of about 1.5% interest and buy Bitcoin with it. So ultimately, we started with a defensive strategy. How do we avoid losing the $500 million as the cash purchasing power melts away? And then it became an offensive strategy. Bitcoin's the best performing asset in a decade. So it's been going up at 172% a year, every year for the past 10 years. And we had the opportunity to borrow money at 1.5% interest and invest it in something going up 170% a year.
Wow.
So obviously the arbitrage is extraordinary. And we thought, as long as we can raise cheap capital and invest it in a scarce asset, and there's an expectation of monetary inflation, it made sense for our shareholders to do that. So we eventually ended up buying about $3.1 billion of Bitcoin, and today it's worth something more like $7.5 billion.
Wow.
So we generated a $4 billion gain for our shareholders. And that was good for the stock. That drove the stock from $120 a share above $800 a share. So it generated many, many billions of dollars of shareholder value for the shareholders. And it left us with a software company that was extremely well endowed, right? And so we can go about our business of selling our software and not be concerned about the impact of inflation on our business.
So there's two things I want to dive into on that, because first you said inflation at 25% a year. I'd like to hear how you got to that number. And second, when you said now that you have this Bitcoin asset, are you selling Bitcoin and using that capital to help reinvest it back into your company, or are you borrowing against it?
No, our view is we don't want to sell the Bitcoin. Our strategy is acquire and hold Bitcoin. It's just that simple. The company has two primary business strategies. The first strategy, the P&L strategy, is we create and we sell enterprise business intelligence software. And the second strategy is a balance sheet strategy. We acquire and hold Bitcoin. And the way that we acquire the Bitcoin is partially through cash flows. The company generates a lot of cash every single year. And so we're sweeping the cash flows into Bitcoin. And then the second is on occasion, we issue equity. And if we issue equity, then we sweep the proceeds from the equity into Bitcoin. And the third would be to sell convertible debt. And when we sell the convertible debt, we use that to buy Bitcoin. And then a fourth is to sell senior secured debt, like junk bonds. We did an offering like that for $500 million in June. It was senior secured debt yielding 6 1/8% interest. And we invested that in Bitcoin. And in the future, we may do any combination of debt or equity financings, or just generate more cash flow in order to acquire more Bitcoin. We also have the $7.5 billion of Bitcoin, and much of it is $6 billion or more is unpledged collateral. So we could generate yield on it with a counterparty if we want, or we could, in theory, borrow against that in the future if we wanted to. And we just consider all those possibilities. It's a function of the debt markets and the Bitcoin markets.
So why is it so important for you to get rid of your cash, I guess? I mean, why is cash not good in your eyes?
If you look at the US dollar, it's been inflating at least 10% a year for the last decade, from 2010 to 2020. And the S&P 500 index was moving up about 10% a year during that time frame. So if you were holding dollars, if you were holding $100 million, then, and you weren't invested in the S&P index, then you lost $10 million of gains every single year. Or another way to say it is, the value of the cash decreased by about 10% a year. And that means over the course of 7 years, you cut your cash balance in half. Okay, what happened in March of 2020 is the inflation rate tripled. If we look at the S&P 500 index over the last 12 months, it's up 30%. I remember I was saying that the money supply expanded at 10% up until about March of 2000. But we all know that the Fed started buying lots of bonds, $120 billion of bonds every month. After that point, the interest rates got pegged at zero. The money supply expanded. And so we started inflating the money supply 3x, 3 times as fast. That means that $100 million in cash is worth $100 million, but $100 million in a stock index is worth $130 million.
Wow.
At a 30% inflation rate, that means that in about 2.5 years, you cut the value of your treasury in half. So what happened to us in March is we realized that we had 500 million, but if you cut it in half every 2.5 years, you realize that you basically burn $450 million over the decade. We're going to lose it all from the shareholder point of view. So the need to find an inflation hedge became much more urgent after March of 2020.
So it's interesting because you talk about how, you mentioned hurdle rate a lot. Could you talk a little bit about that hurdle rate and why Wall Street doesn't like cash particularly?
The price of everything you want to buy is going up, but the inflation rate is not a scalar. It's not a single number. I can measure the inflation on consumer assets if I want, like what's it cost to rent an average house, and what's it cost to buy a Domino's pizza? What's it cost for Netflix, or what's it cost for canned food, or cereal? That's a number. That number is normally not going up as fast. I can measure a different rate, the rate at which really good houses in the Hamptons go up in price, luxury real estate, or an Ivy League education. or if I go to a doctor not in my healthcare system, but outside of my healthcare network, or a really good dentist that doesn't take my dental insurance, that inflation rate oftentimes is 15 or 20%. I can measure the inflation rate of assets, scarce desirable assets, like stock portfolio. That's 30%. I can measure the inflation rate of a bond. Well, a bond that yields $50,000 in interest a year used to cost $1 million when the interest rate was 5%. But when the interest rates got driven down to 1%, that $1 million bond now cost $5 million.
Wow.
So the cost of an annuity, or the cost of early retirement, if you will, went up by a factor of 5. That's hyperinflation. So inflation is really a question of, it's a function of the person and what they aspire to buy. And if your aspirations are to live in your basement of your parents' home and watch YouTube and travel around by Ubers and watch Netflix and eat Domino's pizza and manufactured food, then the inflation rate is low. If you actually remove from the index the highly volatile food and energy, when we create the PCE index, it removes food and energy. If you remove food and energy and you keep the other manufactured stuff, it's even lower.
And PCE is what the Fed looks at when they measure inflation.
Oftentimes. Yeah. But if you put luxury goods and elite experiences and scarce things, if you put trophy assets or stocks or bonds or commercial real estate, that inflation rate is much higher, right? We can see that the Case-Shiller index is up 27% year over year. Producer price indexes for commodities are up 20, 30, 40%. Stock portfolios up 30%. So you see, if you aspire to stay wealthy or to be wealthy, your inflation rate is not the CPI or the PCE. Your inflation rate is probably more like the return on the S&P 500 index. And so that was 10% a year for a decade, and now it's 30% a year. And so if you wish to protect your family's well-being over a long time, then you're not going to be able to invest in assets that only go up 2% a year or 5% a year. That means that most bonds that yield 3% interest have a negative real yield. Negative 2% against the CPI or negative 3% against the CPI, but that's not really the problem. The problem is they're minus 27% against the S&P, right? So your index ought to be something more like that. If you're the CEO of a publicly traded company, you're expected to keep up with the S&P 500 index. So the inflation rate for a CEO of a public company would be the S&P index, which is 30%. So now, if you're Apple Computer and you have $100 billion in cash and you're generating 1% interest on it, and if the inflation rate's 30%, you're losing $29 billion a year in shareholder value every year. So you see, it becomes a much bigger issue for companies that have large cash positions on their balance sheet. I think Berkshire Hathaway has $150 billion of cash. So $150 billion of cash not invested in the market is a loss of 30% of that, or 37 billion dollars, right? Some large amount of money. And it'll continue year after year. And so that's why this is coming to the forefront right now. You could ignore it. You could ignore it if you thought the inflation rate was only 2%. But when you see all these assets going up much faster than 2%, you realize there's something else going on here. And once you embrace the idea that inflation is a vector, it's not a scalar. A vector meaning there's a different inflation rate for every product you want to buy in every jurisdiction where you might be, and it's changing all the time, right? The way you describe fluid dynamics or aerodynamics is vector calculus. You would never try to describe those things with arithmetic. You couldn't model. You can't model fluid flow around an airfoil with arithmetic. Doesn't work. So once you understand that inflation is a vector, then you start to realize that conventional remedies won't work. You can't save your money in a savings account. You can't hold simple bonds. You're going to have to find some other inflation hedge, and that leads you to look for scarce, desirable assets. And the scarcest, most desirable asset in the universe is Bitcoin, because Bitcoin is digital property. It is all the benefits of gold, all the benefits of property, all the benefits of money without inflation, without friction, indestructible, immortal, move at the speed of light, programmable, and everybody wants it on Earth. And you can send it to anybody on Earth. So that makes it kind of the ideal solution in an inflationary environment. I guess one more point that I should make is inflation's bad in the US. It's much worse everywhere else in the world. Whereas the United States dollar might be losing 30% of its purchasing power a year in the last 12 months. But in Argentina, they're losing 60 to 70% of their purchasing power a year.
Wow.
And in Zimbabwe, in Venezuela, and other weaker regimes, they're losing 90% and 95%. So lots of people live in economies where the currency is collapsing. 30% is kind of a collapse, but 90% is that's what happened in Lebanon this year. It's complete collapse. So if your currency is collapsing and you don't have ready access to buy the NASDAQ stock index or the S&P index, then Bitcoin is your solution, because you can put Bitcoin on any mobile phone. So all you got to do is have a mobile phone, and then you can protect your wealth from debasement, and you can conserve your property.
But why is that better than something like real estate?
If you owned a ranch in Zimbabwe, and the regime changes hands, they might take it from you. If you own property in Argentina, when the currency collapses, you have two problems. One, well, many problems. You can't take the property out of Argentina, right? If all of your money is invested in land, you can't move it. So when you have to leave the country, and you might flee the country, or you just might emigrate because maybe you can't get a job there. Maybe you can get a job in New York, but you can't get a job in South America. So you want to move to New York for your job, but you can't take your property with you. That's a problem. The second problem is it gets taxed. If I had $100,000 of property, even in Florida, let's say, there's a 2% property tax a year, and there's a maintenance cost. So the maintenance cost is insurance. You got to paint it. Maybe there's a water leak. There's all sorts of things to maintain a building, maintain a house, even to maintain land. There's a maintenance cost in the form of property tax. That maintenance cost can get to 2 to 4% of the value of the asset. So that means that if you divide 4% into 72, in 18 years, you're going to lose your property. Right? If the maintenance cost is 4%, then you spend the entire value of the asset in 18 years to pay the property tax and the maintenance. But it's worse than that, because normally if there's inflation, the value of your property will be assessed up by the tax collector. So if I print 10% more money a year and I raise the value of your property by 10%, I raise your property taxes by 10%. So you started out with $100,000 of property. In 20 years, when your daughter or your son inherits the property, it's valued at $10 million, and there's a $400,000 tax on it, or $200,000 tax on it. And they're paying more in tax than you paid to buy the property. So have you heard the story of all the families that lost their farm or lost their family home because they couldn't afford to pay the property taxes on it? It's a very common happenstance in the last 100 years. So if you wish to store intergenerational wealth and give it to your children and your children's children and your children's children, property doesn't work unless it's rental property. If it's commercial property and you can generate more rent on it than the tax and the insurance and the maintenance, then maybe you can maintain that. But you can't just maintain a low performing, like a not very profitable farm or a home. It won't work. And ultimately, if you have that property in the wrong place, right? If you had that property in Nazi Germany in 1935, you lost it all, right? If you have that property when the regime changes, you may lose it. So property doesn't turn out to be a good way to store your family's wealth over 100 years. The maintenance cost is too high. It's subject to inflation. It's subject to confiscation, and it's subject to taxation. And those are three problems. And those are the problems. They're the problems that cause most families and most corporations to go bankrupt. Either they're taxed out of existence, or what you own is confiscated from you because you're the wrong religion or the wrong color or the wrong ethnic group or the wrong place at the wrong time. They are seized by eminent domain, or ultimately it's just taxed.
But I think
that's another way of seizing it.
What people will say is, you look at real estate, it's something I can see, I can feel it, I can touch it. And I'm not going to see the value of my property drop by 30% in a week or up and down, that versus Bitcoin. I mean, you could see crashes and booms multiple times in a year.
If you have $1 million of gold stacked in front of you, you can see it, but so can criminals, and they'll take it from you. And if they don't, the government will take it from you. And every single country seized the gold of their citizens, or the bank stole the gold of their citizens in the last 100 years because it's tangible. If you had $1 million in property, you can see it, but so can the tax collectors. And when they need to raise money in your city to pay for schools, they're going to tax your property. And when the government wants to fight a war or they want to do something, they're going to tax your property and you're going to lose it. If you have $1 million of Bitcoin, they can't see it. It's less likely you'll get robbed by a criminal. It's less likely you'll get taxed. If the city that you live in has a municipal tax on your property, you can move your Bitcoin to some other city. If the state taxes it, you can move it to a different state. If the country taxes it, you can move it to a different country. Ultimately, you can find someone to buy your property. If it's digital property, if it's analog property, if you have the most beautiful thing in the city where you live, and I don't want to live there, I don't want it, right? If I have a piece of property in Istanbul, people that want to live in Istanbul may buy it, and banks that bank property may lend you money against it. And they'll lend you money in the currency of the city. So you can maybe get a loan in Turkish lira from a Turkish bank, and maybe you can sell it to another Turkish person. But you see, that's a very small part of the world. Only 0.1% of the world has money in Turkish lira that wants your Turkish property. Wouldn't it be much better if you had a digital hotel that you could move to any city in the world, and then you could borrow money in any currency from any bank, and you could sell it to anybody? And that makes it universally desirable. So it's counterintuitive. Your first response is, yeah, I want the 20th century solution. I want the gold because I can touch it. I want the house because I can live in it. Look, if you're going to live in the house, by all means, own the house. If you're going to own property for your children, get your dream home, buy the car to drive in. If you love art for your wall, buy that and put it on the wall, put a sculpture in your backyard, right? It's okay to buy property that you or your family can touch and feel and you love and you need. My point would be, if you're going to buy $1 million warehouse in Kansas, or you're thinking about buying a building in Singapore, you might be better off to buy the Bitcoin, because the stuff in Kansas has a much smaller group of people that want to finance it or want to buy it. And the same is true with the building in Singapore. And let's come back to the theory of property. Why is property valuable? If I own a building in Las Vegas, if I can borrow against it or mortgage it, that's valuable. If I can sell it, that's valuable. If I can develop it, if I can add 20 more floors on top of a 10-floor building, that's valuable. If I can lease it or rent it out to a casino or a bank, that makes it more valuable. If I can put a lien on it, if I sell the air rights above my building for $10 million to the building next to me so they can build their skyscraper, that's valuable. So when I own the property, I have valuable rights. If I actually owned a share in a REIT, if I was a limited partner in a real estate investment trust, I would own a security, but I wouldn't have the rights of property ownership. You can't mortgage a share of stock, and you can't lien it, and you can't force the building to be developed, and you can't rent it, take it away from one deadbeat renter and give it to a better, higher value client. So your property rights are much weaker in a security than they are in unfettered property. So yeah, I want to own the building, but you got to be a rich person to own a building, and you need a team of property development managers to manage the building. And here's the big idea. That's analog property. Digital property could be developed in many more ways. Any computer programmer can develop an application to improve your digital property. So for example, if that 1,000-room hotel in Vegas becomes a digital hotel, the first thing I do is I can move it from Vegas to New York, and I can move from New York to Japan during the Olympics. So now I can find the city that will pay me the highest price for my room nights. Okay, that's good. Well, if the taxes go up in Japan, I can move to Singapore. That's better. So you see, my digital property is less taxed, and it generates a higher rental income. But here's the other thing. The frequency of the property increases. You can maybe rent a hotel room for a night in Vegas, but what if I could rent it for an hour? What if I rented, instead of 1,000 room nights a day, I rented 24,000 room hours a day? And what if I could split the room hours and rent them between Japan and Tokyo and Singapore and London and Paris and New York and Vegas? Now I've decomposed my hotel. Now, what if I decompose my hotel down to room minutes? And what if I basically sold out the room minutes in a million different places and I recomposed it? Now that digital property is starting to look less expensive to maintain, less likely to be confiscated, higher yielding, generating a higher average price. And I'm going to have, I'm going to go from 100% occupancy, where I sell 1,000 room nights a night, 365 days a year. And I'm going to go to 10,000% occupancy, because I'm going to be selling out room minutes at a triple average rate to the highest bidder. And so at some point, your digital property becomes almost digital energy. It's like moving very fast. It's high velocity capital. And what's the price you pay? Well, the price you pay is you can't see the energy. The benefit you get is 1,000 times as much energy. Does that remind you of something in the real world? Like electricity? Like think about if I said to you, I'm going to deliver 400 horsepower of energy to your kitchen or to your carriage. Okay, would you rather have the 400 horses in your kitchen or just the electric motor? You see the silliness of it all, right? Yeah. If I put 400 horses in your house, they would crap over everything. And I couldn't fit them in your house, and they'd probably kick you in the face. And you have to feed them. So it's just not, if I put 400 horses in your boat, they'd topple the boat over. But if you look at all those boats, they have 350 horsepower motors, right? You're using condensed energy, either in liquid form, which we call diesel, oil. That's what John D. Rockefeller gave us, liquid energy. Or you're putting it in electric motor form like Tesla, and we can thank Tesla and Thomas Edison. They gave us, electrical energy. And that concentrated energy is something, you can't see it. It can kill you, by the way, right? It'll shock you to death. But try to imagine New York City without concentrated electrical energy. And by the way, try to imagine it without concentrated metallic energy. What's another word for concentrated metallic energy? Steel. Steel is concentrated metallic energy. You want to build a skyscraper? You need to actually pour a huge amount of energy into a steel mill, create the metal. You can build a skyscraper, and you need the electricity to run the elevators. You turn off the electricity, everybody's going to die. You take away the steel, everything collapses. So why Bitcoin? Because Bitcoin is concentrated energy in digital form. And what's the problem? Oh yeah, it's new, it's different, it's scary. I can't see it, I can't touch it, I can't smell it. Can you see, touch, or smell electricity? No. Is it real? Yeah. Right? And so if I want to build something to last 1,000 years, I need to build it on a foundation of monetary energy. If you want a family endowment, if you want a school, a university, a city, a country, a company, you need a balance sheet. And if you build your balance sheet on an asset that's crumbling 10% a year, you're only going to last 10 or 20 years. If it's crumbling 20% a year, you won't last 36 months. If it's crumbling 3% a year, you might last 50 or 100 years. You want to last forever? You need something indestructible. Bitcoin is immortal, indestructible, monetary energy, right? That's why it's important.
So I recently did an interview with Peter Schiff, and we got into a little debate about this. And what he says is real estate provides value because it puts a roof over your head. Gold provides value because you can make jewelry out of it. You can use it for other things as a conductor. But Bitcoin, its value is really in its belief, kind of like the dollar, but the dollar has the government behind it, where the government says you have to use the dollar. And so if people lose their belief in Bitcoin, if they don't believe in Bitcoin, then what value does it provide though?
I have two comments. One, the perfect money would have no utility, right? You don't want to use corn as money, or alcohol as money, or cigarettes as money, or houses as money, or bales of tobacco as money, or gold as money, because these things have a utility value as jewelry, as houses. If you monetize houses, nobody can afford to buy one. If you monetize gold, your jewelry just got 3 times as expensive. If you monetize food, everybody starves to death. So the whole idea that money should have a utility value, I think it's just wrong. It's just a wrong idea. And monetary theorists would understand, and they would say, you want to monetize a token, a synthetic token that has no other use, because that way 100% of the value of the money is monetary. It's the brand value. And that's what Bitcoin is. My second point is when you look at this, the US dollar is backed by the United States Army, by the military might of the United States and the police force, and the belief in the United States of America. Bitcoin is backed by the network of Bitcoin proof of work miners. There are millions of Bitcoin miners scattered all around the world. There are billions of dollars of capital. There are billions of dollars of energy that are used to defend the network. There are 10,000 plus nodes running the Bitcoin software on it. There are tens of thousands of Lightning nodes to process transaction payments. And there's hundreds of millions of people that believe in it. So in fact, Bitcoin is an ecosystem. It is a combination of political support. It's the support of the electorate. It's the support of the politicians. It's the support of the miners. It's the support of the holders. It's the protocol itself, which is built into tens of thousands of companies and built into many political jurisdictions. And that makes it the most secure ledger in the world, the most secure database, the most unhackable, most indestructible database. And it also makes it the strongest brand in the world. It's not just the greatest monetary brand, it's the greatest brand. And by that, I mean, it's worth 1.3 or $1.2 trillion right now. That's all brand value. That's a lot more valuable than the brand value in Coca-Cola or Apple or Google. And everybody in the world recognizes Bitcoin as money. The closest thing to that maybe is the United States dollar. But the point is the US dollar is an inflationary currency. It's losing value every month. And Bitcoin is appreciating asset. It's gaining purchasing power every year. So it makes it the ideal money. And none of these other things that he mentions really are, because they're not scarce and they're not completely money, nor are they usable as money. How are you going to give gold to 8 billion people on an Android phone? Yeah. How are you going to move it? How are you going to run an economy on that? If you want a foundation for a 21st century economy, you need to be able to give the money, the monetary asset, to everybody on Earth, and they need to be able to receive it for free and move it at the speed of light and program it on their mobile phone. And you can do that with Bitcoin, and you can't do that with gold. And you can't even, ultimately, the dollar will move as a stable coin, but it will move on crypto rails. And it'll be simply the medium of exchange layer on top of the store of value layer, which is Bitcoin.
But what about the people who say Bitcoin it's slow, it's inefficient, there's better coins out there? I mean, are you diversified in different cryptocurrencies, or will Bitcoin continue to be the winner?
Yeah, no, Bitcoin is the winning monetary protocol. It's like the English language is the successful language of technology. It's like the metric system is the system of science, and base 10 math is the system of mathematics. You could try to commercialize another language, and you could try to commercialize base 16 math, and you could try to commercialize a different system of measures, but you're not really creating any value. You're kind of reinventing a system, a wheel that already works, and the network effect is so powerful that you have almost no chance of success. With regard to speed, many people misunderstand this. Bitcoin moves at the speed of light on layer 2 and layer 3. So the Lightning Network has thousands of nodes, tens of thousands of nodes, and you can send $37 for 1/20th of a penny in a split second over the Lightning Network in Bitcoin, right? So you can move one Bitcoin here to there very rapidly. So Lightning is a decentralized layer 2 protocol to move Bitcoin at the speed of light for free. But there are other applications, like all the exchanges, Coinbase and Binance, they're moving Bitcoin at the speed of light. And Square, Cash App, and PayPal, they're also moving Bitcoin at the speed of light for free. And any custodian can move it at the speed of light for free and program it. So you don't really need a base layer that moves the money fast. In fact, it's probably detrimental. In order to create a base layer that moves the money fast, you have to sacrifice security and integrity. It's much riskier. Anything that moves the money fast is easier to hack, easier to corrupt, is less secure, and ultimately not decentralized. If the base layer isn't decentralized, it's not property, it's a security. And I'm using a legal definition of security. If it is legally a security and is not property, that means it's certainly unethical to promote it as a public figure, and it's probably illegal to promote it as a public figure. So like a senator, a congressman, a mayor, a head of a country could never promote a security as money, right? Because it's like me promoting my stock to Congress. I couldn't get elected and say, I want the United States to adopt my stock as a store of value, because there's conflict of interest. So all of the crypto approaches to get more speed or more functionality, they're not going to serve as a monetary asset or the base layer, the layer 1 for the 21st century economy. At best, they could be a layer 2 or a layer 3. They might be a layer 2, and they're more likely a layer 3, where they're kind of a security proprietary network that moves the underlying Bitcoin around on the network. And that's fine. They will compete. All the layer 2s and layer 3s compete with each other. Lightning competes with PayPal, competes with Square Cash App, competes with Coinbase, competes with River, competes with, Binance. They all compete to move the money around, and they all add value and functionality and leverage and security. But what they can't do is they can't create pure digital property in cyberspace. Because for it to be pure digital property, it needs to be something that no one owns and no one controls, that is permissionless. And that means a proof of work network on an open protocol that has been distributed via fair distribution, no ICO. If there's a controlling group of people that did a pre-mine, or if there was an initial coin offering and there's a small group of people that have a disproportionate amount of the asset, or if there's anybody that can control the destiny of it, it's not property, it's a security. And ultimately, Bitcoin is the one fair, honest, decentralized network in the world that had this kind of immaculate conception, where there was never a pre-mine, there was never an ICO, the founder is gone, the initial coins from the initial mining were never moved. Everybody buys in at a fair basis, and nobody can control it. That's what makes it money of the people, and that's what makes it a global, open, international digital property. And it could be adopted by any country, any company, any individual. That makes it quite special and unique. And there really is nothing else that compares to that.
Are you worried about a potential cryptocurrency crash? You have a lot of people talking about a potential market crash in a lot of different places. Michael Burry has come out and said that, because of the amount of debt in cryptocurrency, that cryptocurrency is on the verge of a massive mother of all crashes. What are your thoughts on that?
No, I'm not worried about a crash. I think Michael Burry just doesn't understand what Bitcoin is. If he understood it to be digital property, then once you understand that, it's like worrying that people will stop using electricity, or stop using fire, or stop using steel. Are you concerned that people will stop using steel? No, because it's better. Right? Digital property is the solution to $500 trillion worth of problems. Everybody needs it. 8 billion people on Earth need it. Who doesn't want property rights? Who doesn't want to not starve to death, right? What company wants to have their balance sheet collapse? What country wants to have their finances collapse? So it's just as useful as steel. Like, why do we use steel? Because we want our stuff to work, because we want our ships to not sink, and we want our buildings to not collapse. So we'll keep using it. And Bitcoin is crypto steel. So the volatility is just as people understand it. It's going to go up forever, because more and more capital is going to flow into the digital property network. And Bitcoin is going to succeed because it's the dominant network. And it's the dominant network because it has the greatest support, the greatest technology, the greatest assets. It's the most secure. It's the most trustworthy. And if you have to pick one, you're going to pick the best one. That's what makes it, the successful one.
Is there still opportunity and room for people to come in and buy Bitcoin or cryptocurrency now and still make money? And how should they be buying? Should they come in and just buy in bulk, wait for a price dip, dollar cost average? How should somebody now who's hearing this, getting excited by the whole idea of Bitcoin property, wanting to see some upside, how should they get in?
I think that you should think of, if you're an individual, you should think about all your assets and divide them into 3 categories. What do I want to save forever, for 30 years? What do I want to invest in businesses that I believe in? And then what do I want to gamble or speculate with for fun? So some people like to gamble and speculate, and so they'll have a lot of their money in that. Some people are investors, and they kind of feel like they want to invest in some technology or something, and they'll invest in that. But if you just want to save, well, you're saving for a decade, then you just at whatever rate you feel comfortable, you start to acquire Bitcoin and hold it, right? So I think the Bitcoin will keep going up with volatility forever. So I will continue to buy Bitcoin. I bought it at 10,000. I bought it at 20,000. I bought it at 30,000. I bought it at 40,000. I bought it at 50,000. I'll buy it at 60,000. I'll buy it at 70,000. I'll buy it at 100, 150, 200. I would just gradually sweep my cash flows and convert my excess capital into Bitcoin as I come across it from time to time. But you take a long view, right? If you're and everybody just has to figure out what their time horizon is. Yeah, I say to people, if you wouldn't hold it for 10 years, you probably shouldn't hold it for 10 minutes.
Wow.
Right. So if you're not, that's what you're doing if you're saving. If you bought something to give to your grandchildren or to your son or your daughter, right? You bought it for the long haul. And then, other money that you need in the near term or that you want to gamble with or invest in, use it for that. But obviously, if you're a long-term saver and you want to buy the apex property, Bitcoin is the apex property of the human race. If you're not sure about it, you should do more research. You go to hope.com, HOPE. We've got lots of research on Bitcoin. There's a free course on Bitcoin at the Saylor.org website. Otherwise, go on YouTube and Google and start doing your own research. Come to your own conclusions. Read the books. If you're not convinced, keep investing time until you are, or until you decide not to do something. But, once you get an understanding of what it is, generally people get more convicted as they know more, and then they invest more.
It's interesting that you say that it will go up forever, because I think for most traditional investments and investors, that just sounds scary. And it sounds like gambling. I mean, it just sounds like euphoria at that point, because you always are told that no investment can go straight up forever. No investment can always just go up, especially when we compare it to traditional money. So I think that's where a lot of people kind of get scared by that idea, because one, you can't see it. Second, you have a lot of people that think it will go up forever. And then third, you have people that are trying to get rich very quickly off of it. People that are trying to double their money in a matter of months and seeing very, very high returns, which just aren't normal.
Yeah, so let's talk about why things don't go up forever. Most every other asset you can buy has a supply that varies with the demand and with the price. So if the price of gold goes up by a factor of 10, if gold was $20,000 an ounce, what do you think the gold miners would do?
Produce more.
Yeah. If you owned a company and the company's stock went up by a factor of 10, what do you think you'd do as a CEO?
Well, probably sell some of my shares or issue more.
Yeah. If you had debt, if you issued debt and you had to pay 5% interest, and then the interest rate fell, and now I told you could issue debt for 0% interest, would you issue debt?
Yeah, I mean.
So if the price of bonds go up, people create more bonds. If the price of stock goes up, they issue more stock. If the price of gold goes up, they create more gold. If the price of houses go up, people create more houses. So every other asset is naturally inflationary, and the higher the price goes, the higher the supply gets. And that's the society trying to bring the price down. Every company has executives, right? So employee salary go up. If you had 10 employees in your company and your stock price went up by a factor of 20, you think they'd ask for a raise?
Or equity.
Yeah. They'd say, give me some stock options, or give me a raise, because you're rich. And so if you have employees, if you have executive team, your costs go up when the price goes up. And that's the case with everything. What happens is all these other things you're investing in, they're not scarce. They're not a scarcity. They're a commodity. You know, you own land in New York City on Central Park. If somebody pays $80 million for an apartment on Central Park, what do all the developers do? They have a meeting and they decide to build a new building because they can sell every apartment for 80 million bucks. And now you don't have the only apartment on Central Park. They create more apartments on Central Park. So, yeah, you ever go to Dubai? You think land is scarce? They make land. They built land in the middle of the Red Sea. If the price goes up high enough, everything, all your costs will go up and the supply will go up. The price will come back down again because everything else is not scarce. Bitcoin's scarce. There's 21 million. There'll never be more than 21 million. You can expect the supply of currency to keep going up. The US dollar will keep inflating. It's inflating at 30% this year. There'll be 10% more year after year after year. Other currencies like the peso, the bolivar, the naira, the ruble, they will also inflate. Your assets denominated in those currencies will also go up in price. If you own stocks like the S&P index, they went up 30% over 12 months. But Bitcoin went up more than 300%. And gold didn't go up. So if you're an investor, you have to buy a market basket of scarce, desirable assets that other people are going to want to buy from you in 10 years. So ask yourself the question, in 10 years, will someone else with money want to buy the thing that I own? Okay, if you buy some art, well, is it a Picasso? Will people want Picassos? If you buy a sports team, will somebody want to watch football? You know, if you buy a building, will someone want to live in the city or use the building I bought? It's all just a question of how much of that asset will exist in a decade and will people want it? And I think Bitcoin is the most desirable asset because everybody on earth is going to want it.
But can't you just create another cryptocurrency similar to Bitcoin and then create another 21 million of that cryptocurrency too? We've seen thousands of new cryptocurrencies created.
And that's exactly the point. They've all failed. You can create 1 million of them, but there's only one Bitcoin. So if you're stupid, then you will buy dog coin number 16. If you're stupid. But if you had $1 million and your choice was to buy Bitcoin or dog coin number 16, the problem with dog coin number 16 is the person that bought it is stupid. And they're stupid. They bought it because they didn't like dog coin 15 because that wasn't as good as dog coin 14. But someone that will buy dog coin 16 will buy dog coin 17 and dog coin 18. So you're getting yourself in this situation where you're buying something which is not scarce based on a fad. And your doggy coin number 97 is going to be defeated by dog coin 184. That's why you don't want to own the dog coin. The person that buys Bitcoin wouldn't buy the dog coin, you see, because Bitcoin is a proof of work network secured by mining and real energy. Doggy coin 37 is an imaginary coin secured by imaginary energy and imaginary world for imaginary things. And you can imagine 1 million of them. Bitcoin is real money secured by real energy and real technology in the real world for real things. So, will it be copied 10,000 times? Will they work? None of them, right? Bitcoin Cash is less than 1% of Bitcoin right now. That's the closest like-kind substitute. It's collapsing, right? So, no, they're not going to work. They're not going to work because intelligent people want their money to last forever. It's kind of like, you put your stuff on YouTube. You could create your own yo-yo tube or me tube or groove tube. Okay, why don't you do that? You could own it all because no one's going to watch it. Well, what happens if some people watch it? Well, the people that work for you will create yo-yo tube 4 if it works, and they'll keep cutting the market in half. And the person that creates the one yo-yo coin will, break off and create 172 more yo-yo coins, and they'll all lose their monetary premium and they'll lose their brand because people don't want to take the risk, right? They want the safe bet. And so Bitcoin is the safe bet, not to mention the fact, as I pointed out before, the other problem with all the other networks is their securities, which makes them somewhere between illegal and unethical. So if you're not persuaded by the fact that they're risky, insecure, and a competitor will probably copy you, the real problem is they're not property. And if they're not property, that means you're not going to be able to trade them or promote them or hold them if you're an institutional grade custodian or a public figure. That's the problem. Bitcoin is property.
I know you've also been in touch, communicating with Elon Musk, trying to get him to convert some of their balance sheet extra cash into Bitcoin. I mean, so are you trying to now, what is kind of, I guess, your thought process on that? You want more companies to now move some of their portfolios into Bitcoin to protect their companies, to grow their companies, or I guess tell me about that.
Well, Tesla did buy Bitcoin on their balance sheet. They bought $1.5 billion of it. And Elon Musk bought some additional Bitcoin through SpaceX and other personal entities. So there are about 2 to 3 dozen publicly traded companies that now own Bitcoin on their balance sheets. All the public miners own Bitcoin on their balance sheet. Square owns Bitcoin on their balance sheet. Coinbase owns Bitcoin on their balance sheet. MicroStrategy does. So we've simply been educating corporations on how to acquire Bitcoin and how to handle it. And that's been pretty successful over the past year. Thousands and thousands of private companies are acquiring Bitcoin on their balance sheet and dozens of public companies. And I think that trend will continue.
Interesting. I think it's interesting, not just because companies are buying it, but now when you invest in equities, companies on the stock market, what you're looking at is, okay, what are they doing with their cash? Well, okay, this company, kind of like what you were talking about before, this company's keeping their excess cash in treasuries or cash, and this company's keeping their excess cash in Bitcoin. And now it becomes a question of, what kind of company do I want to invest in? Do I want to invest in a company that's holding on to Bitcoin? So it's kind of like a derivative Bitcoin investment as opposed to just a cash.
Yeah, well, if you believe in Bitcoin, once you understand it, you would think, well, if they hold Bitcoin, their treasury is going up every year, 173% every year for the last 10 years. But you can plug in any number you want. Let's just say you thought it would go up 20% a year. Do I want to hold an equity in a company that has their treasury going up 20% in value a year? Or do I want to hold a company where their treasury is losing 20% of its value a year? And if you don't understand Bitcoin, then you're going to want the companies that invest in cash. But if you understand Bitcoin, you would want the companies that invest in Bitcoin. And there are a lot of ETFs that have formed where their express strategy is to find companies that have Bitcoin exposure on their balance sheet or their P&L and to invest in those companies.
So it sounds like a big reason why people haven't moved into things like Bitcoin is obviously inflation, things that we saw happen after the 2020 pandemic and crash. Are you worried then about the strength of the dollar and the long-term health of the dollar and I guess the US economy in general?
I think the dollar is going to continue to weaken, but other currencies will weaken faster. So the dollar is going to spread throughout the world. It's about 130 currencies in the world that float. Most of them are going to collapse into the dollar. And most of the world's going to dollarize. And so the dollar is going to spread. I think that we're in an inflationary economy. And if you're an investor, if you're an individual, or if you're a corporation or the like, then you need to adopt a balance sheet strategy where you invest your assets in scarce desirable properties. Either maybe you can buy securities, otherwise you buy properties, but you need to be invested in that. In assets that can't be debased. The losing strategy is to hold all your money in cash and lose 10 or 20% of it a year, lose 20% of the value of your assets a year in cash. The devastating strategy is to hold your money in a currency other than the dollar. Like in Lebanon, they lost 90% of all their wealth in the last 12 months. Right? In Argentina or Venezuela, they're losing their wealth faster. So the losing strategy is a weak currency The slowly losing strategy is a strong currency like the dollar. A better strategy, a necessary strategy, is I invest in assets. And the winning strategy, in my opinion, is levered long property, levered long assets. And that means I buy a house with a mortgage on it. And if I have a house without a mortgage on it and I could borrow money at 2.5% interest, I borrow money from the bank at 2.5% interest, and I either buy a diversified portfolio of stocks like the S&P index that goes up 10, 20, 30% a year, or I buy Bitcoin, which goes up faster. Right? So I'm basically borrowing money cheap and I'm lending it expensively, right? I'm investing it and generating a higher yield on it. So that's what MicroStrategy's done. We, in essence, borrowed $2.2 billion at a blended rate of 1.5% interest, and we invested in an asset that's been going up faster than 100% a year. That's what I would do if I could, right? It's just a question of who will lend you money. I don't think it's a good idea to take margin loans. Right? If you have margin loans, they get marked to market every minute, and if there's volatility, you might get forced liquidated. So that's not a good idea. But if you have long-term debt, 10-year, 20-year, 30-year debt, 7-year debt at a fixed interest rate, and you can invest it in a high quality asset or high quality property or high quality business, then that's a wealth creation or a wealth preservation strategy that makes sense. Always has.
But are you worried about a potential economic slowdown and how that could then trickle down into the stock market and maybe the cryptocurrency market? I mean, we've seen the economy start to grow, but a big reason why the economy is growing is thanks to cheap debt, thanks to stimulus programs. And as the stimulus go away and as interest rates go up, would that cause the economy to slow down, which would then trickle down to every other asset class?
Well, that's one of the reasons that I wouldn't buy equities myself. Like if you're buying stocks, like value stocks are valued based upon the discounted value of the cash flows over time. And so you get hurt two ways. One, the cash flows are getting discounted. They're less valuable because the currency is being debased. If you expand the money supply by 15% a year and you wait a decade to get the cash flows aren't worth anything. Right? So, right, money that you get in 7 years or in 5 years is only worth half as much as the money you get today in a 15% inflationary environment. So if you're investing in equity based on cash flows, then you've got inflation exposure, and the other problem is you've got economic, exposure, right? If the business underperforms due to cost, if their costs go up and they can't raise their prices, mm-hmm. And how many companies can raise their prices 15% or 20% a year? And if your costs are going up 20% a year and you can't raise your prices 20% a year, you got a problem. So that's a problem with companies and equity and securities in general. That's a problem with bonds. It's a problem with stocks. It's a problem with real estate and REITs and commercial real estate and leases. Most leases have a CPI cap in them. You can only raise the rent at the CPI rate or less, or even they're capped out at like 2%, 3%. The reason that Bitcoin makes sense, and I'm not saying every crypto, the other cryptos they're just companies. You're betting, you're speculating on all the rest. Bitcoin is the dominant digital monetary network. It's different. The reason that Bitcoin makes sense is it's not valued based on cash flows. It's a non-sovereign store of value as a bearer instrument. There is no product. There is no cash flows. There are no quarterly results. There are no costs, right? There's no employees to strike. The cost of aren't going up. There's no supply chain to get snarled. There's no revenues. There's no cash flows. Bitcoin is a bank in cyberspace run by incorruptible software. For people that have neither the wherewithal or the inclination to form their own hedge fund, right? That's what Bitcoin is. You're just putting money in a bank. So if you're worried about the future, if you're worried about inflation, if you're worried about competition, if you're worried about corruption, if you're worried about taxation, you want to run to the least risky thing you can find, the thing that's hardest to corrupt, that's hardest to tax. What is the product of Bitcoin? When you buy a Bitcoin, you're buying 1/21 millionth of all the money in the bank forever. That's what you're buying. What will the product be in 1,000 years? 1/21 millionth of all the money in the bank. It's the same every year for 1,000 years. That's not the same with Apple Computer. Apple's got to change the iPhone. Google's got to change the product. Microsoft and other companies, Amazon, they got to change what they do. They have Nexus and employees, and they have regulators, and it's possible to put price controls on what they sell, and they can be unionized, and they can be banned, all sorts of things. Bitcoin just exists to be, right? If you're looking for the lowest risk place to go in an uncertain world, Bitcoin is the low risk institutional grade asset. So as I look out at all these risks, I say everything else you could buy is riskier. Bitcoin is the least risk. And that's why it makes the most sense, because every intelligent person is going to run away from those stocks, away from their real estate. They're going to sell their real estate. They're going to sell their stocks. They're going to sell their gold. They're going to sell their commodities. They're going to buy Bitcoin. They're going to sell all their altcoins and all their other random things, because those things are risky and competitive and insecure and regulated. And Bitcoin is the least risky, hardest to regulate, hardest to tax, hardest to break, most universally desirable thing in the universe. There's nothing that's more robust that you can get your hands on.
So you would recommend then physically buying Bitcoin itself as opposed to going through like a Bitcoin ETF, where now you're buying Bitcoin futures and this ETF doesn't actually own any physical Bitcoin. That's more on the speculative side.
I would say that the best thing to do is to buy the Bitcoin. And if you don't take custody of it, at least be in the position to be able to take custody of it whenever you wish, wherever you wish, whenever you wish, right? That's the highest form of property right, the safest, most secure long-term investment. You might decide to have it with an institutional custodian until you decide to take custody. Or you might decide you're more comfortable owning custody of it directly, but you should definitely have the property. Now, when should you buy the security, like the ETF or a fund? Well, if you run a company and by charter you're only allowed to buy securities, you're not allowed to buy property, then you're better off to buy a Bitcoin ETF than to buy this S&P ETF or the gold ETF, right? So there it makes sense. If you have money trapped in a retirement account or in some kind of account where you're required to invest in securities and you can't take it out and invest in the raw property, then better to invest it in a Bitcoin ETF than a bond ETF. So it depends upon your charter. Certain corporations, endowments, individuals, they can only buy the security. But if you have the flexibility to buy the property, then you could do that. Now, if you're an investor, we talked about savings. If you have money you want to save forever, you buy the property. If you have money you want to save forever, but it's locked up in an account where you have to buy securities, you buy the security. If you're an investor, maybe you would buy a Bitcoin miner because you think the Bitcoin miner is undervalued after you build a model where you calculate the fair value of the Bitcoin miner. You could buy a company that deals in Bitcoin because you like the company's business model. But now you're making an investment decision. You're not making a savings decision. And you need to be competent as an investment analyst. And you're taking a different set of risk.
So you talk about Bitcoin being a property. So do you not anticipate people then transacting with Bitcoin? Because I think the whole idea behind it being a cryptocurrency is people expect to use it as a currency, use it to go out and buy things.
Yeah, I don't think so. I think that's wrong. Like in the next decade, that won't happen. Like in the long term, right? I mean, the Bitcoiners look to hyper Bitcoinization where all the world currencies disappear and there's only Bitcoin. And that's an idealistic Austrian economics world. But I don't think we're going to get to that ideal end state anytime soon. I think that the next stage in development is nation states will issue their digital currency, like a stable coin, the US dollar and the CNY. And individuals will use stable coins as a medium of exchange. And then they will use Bitcoin as a store of value. So I see money decomposing into currency and asset. And the asset is Bitcoin, something you hold for a decade or forever. And the currency is the dollar or the euro or the yen or the renminbi. And that's a medium of exchange that you use to buy and sell things. And you'll hold that for a month. That's like your checking account. And Bitcoin is like your savings account that actually yields you like 20, 30, 40% interest and not 0% interest. It's a real savings account that goes up in value over time. That makes a lot more sense for a lot of reasons. Number one, as long as there are nation states, as long as there's a viable government, they're going to protect the currency. That's kind of, unless you expect the United States to collapse or the Chinese government to collapse, right? There's going to be the Chinese currency and the US currency. And I think that's a good thing. I don't think we're really hoping for anarchy, right? If the entire government collapsed, you would have a lot of other problems. So that's the first observation. And the second is there's 100 million businesses that have all their accounting systems wired to pay their taxes and do all their transactions and pay their vendors and pay their employees in fiat currencies. And they've spent a decade to get those accounting systems working that way. And so it's just physically impossible for 100 million companies to change to paying people in a different asset. There's a third reason. As long as the nation states exist and they tax, they designate Bitcoin as property. And if they designate something as property, gold is property, Bitcoin is property, or they designate a security like your stocks, like Apple stock, as long as you're designated as property or security and not a currency, you have to pay a tax when you transfer the security or the property to another person. It's a taxable event. So if I were to pay you $1 million and I bought that Bitcoin for $500,000, I would generate capital gains tax on $500,000 of capital gain when I paid you in the Bitcoin. And that's an accounting problem, but it's also a tax problem. I'm going to have to pay $200,000 in tax in order to pay you in Bitcoin. If I paid you in US dollars, I would owe zero tax and my accounting system would work. So you see, there's an accounting reason and a tax reason and a political reason why currencies will stay in the USD, CNY, euro. And why it's better for a corporation or for an individual to use Bitcoin as an asset in their treasury. And ultimately, there's one last reason why this will stay this way. It's much wiser for you, like for me, it's much wiser for me not to pay you in Bitcoin, but rather to borrow the money to pay you and pay you in dollars and keep the Bitcoin. You see, if I were to pay you $1 million over however long you get paid $1 million, I pay you $1 million and I borrow the money and I pay 3% interest, then I have no tax and I have $1 million of Bitcoin. And the Bitcoin goes up 20% a year. And in 3 years, I have $2 million of Bitcoin. And in 6 years, I have $4 million of Bitcoin. And in 10 years, I have $8 million of Bitcoin. So if I pay you in dollars and I borrow the money and I keep the Bitcoin, I'll have $10 million worth of assets in 10 years and I'll have no tax bill. If I were to pay you in Bitcoin, I would have nothing in 10 years. By the way, I would have nothing. I would have minus $200,000 in 10 years, you see, because I had to pay the $200,000 in tax. I had to pay you $1 million and I have nothing. So you see, from a business point of view, it's an advantage to the business to fund their expenditures in currency, which is collapsing, to borrow money cheaply and to invest the money in the asset that's appreciating. And so for the next decade, not only is it kind of difficult to impossible to do that, to pay people in Bitcoin, but it's unwise to pay them in Bitcoin.
But do you think if more people took their cash, moved it to Bitcoin, that would create some sort of deflation, which would in turn hurt the government because they have 29 some trillion dollars worth of national debt, and that would then make this paying off the debt more expensive. So, don't you think the government and the Fed would try to do something to stop that because they want to keep inflating the value of the currency to keep paying off their national debt?
Not this decade. Maybe in the year 2040. Right, Bitcoin's only $1 trillion asset class. Gold is 10 trillion. So if Bitcoin went up by a factor of 10, it would still be inconsequential. If it went up by a factor of 100, it will start to compete with all the equity indexes and the bond indexes. So when Bitcoin is $100 trillion, it'll be 5% of all the money in the world, or 10% of all the money in the world, you see. So when it gets to $300 trillion, at some point, Bitcoin will cause governments to print less money, and they'll have to resort to taxation. Right? The government can generate a lot of inflation as long as Bitcoin is weak. And when Bitcoin is half of all the money in the world, they'll have to move more toward taxation. But you're talking about 20 years out, 30 years out. There's a soft landing. So Bitcoin is not really a threat to strong governments, to the US and to China, especially to the US. It's not really a threat. It's more of a benefit for the next decade. It's a problem. It's more of a threat to weak currencies, like in Nigeria or Venezuela or Zimbabwe, right? If you have a Lebanon or Afghanistan, if you have a weak currency, that currency is being replaced with a dollar, and Bitcoin and the lightning rail is the rail over which the stablecoin dollar is going to travel. So the idea that you've noted, it's actually, if you said a country 100 times as small as the United States, are they threatened by this? Yeah, right. Their currency is getting demonetized, but not the United States, not the Western world, not Western Europe and the US. For them, it's on the margin. It's more of a benefit than it is a detriment to embrace this. It's for weak nations, and it's like weak anything. If you're weak and then you're going to suffer the soonest. If you're strong, then you're going to benefit. And ultimately, Bitcoin's got to get 100 times bigger before it really becomes material. And at that point, yeah, the interest rates will go up, and the government will probably not be able to issue as much free money. But that means funding the government will become a political process. And the debate will move into the Senate and the House, and they'll debate over what should the tax rate be. And that's okay. Either you reduce your expenditures or you raise more revenues in a fair fashion, subject to a political process.
That also sounds kind of scary if you look down 20 years, because if we kind of go along with your hypothetical, if people move a lot of their wealth into Bitcoin, the government doesn't have the ability to print money. Now they need to find out how to raise taxes. Well, in my mind, what does that mean? Well, then they're going to try to tax the value of your Bitcoin. Well, like you talked about, Bitcoin is easily movable. So now if you have a lot of people in the US who are holding on to Bitcoin, have their wealth in Bitcoin, the US says we're going to tax 10% of your Bitcoin. You got to pay us 10% of whatever Bitcoin you own. Well, that sounds like it would, make people want to leave. And that's what's scary.
Well, let's look at the optimistic view, right? Eventually, it's good for the civilization if the government stops inflating the currency and starts using taxes, because at least there becomes a check and a balance on the size of government. So eventually, taxes are going to arrive, and governments are going to have to figure out how to pay the cost of government programs through taxation. That's coming. When that comes, they're going to tax property. They're going to tax your stock portfolio. They're going to tax your building. They're going to tax your income. They're going to tax your gold. They're going to tax your Bitcoin. They're going to tax whatever they can see or whatever they know of. That's true. They already tax your property, right? I mean, like this is not a surprise. I'm sitting at a house in Miami Beach and there's a 2% a year property tax on it. There's already a tax, right? We didn't invent the idea of property tax. So
But you can't move your property like you can your Bitcoin.
And that's the point. Eventually, taxes are going up. But when that happens, would you rather own a city block in New York? Or would you rather own a warehouse in Kansas, or a house in Miami, or Bitcoin? Or would you rather own a company or gold? Now, of all those things, the thing that's easiest to expropriate or tax is going to be the stuff you can't move, right? The property is going to be the easiest to tax, then the company, then the gold, and the securities. Bitcoin's the hardest. It's hardest to tax, it's easiest to move, and you can place it in more jurisdictions. So there's going to be tax arbitrage, right? Some jurisdictions are going to tax you more than others. If a state raises the tax bill on Bitcoin, won't you just move it to another state? If a country raises the tax rate, you'll move it to another country. The country may say, well, it doesn't matter where it is, you still got to pay us, but then you can move yourself. The country could say, well, it doesn't matter if you move yourself, you still got to pay us, right? But you'd still rather own the Bitcoin than own the building. You see, if they decide to take all your property, and they might, right? I mean, in Venezuela, they expropriated the oil company. In Cuba, they took everybody's property, right? If they decide to take all your property, you could leave the country with your Bitcoin and keep it all, but you can't leave the country with your building. They will get that. You see? So ultimately, whatever you think the world holds, you're probably going to go to the country and go to the jurisdiction where you think you'll be treated the best. And you're going to fight for your property rights as best you can. And whatever happens is going to happen. But you would still rather have your family's life savings in Bitcoin stored in your head than have a bunch of land sitting in the middle of San Francisco with your name on it that you can't move.
Wow. That's a lot of information. Thank you, Michael. That was just a great masterclass breaking down everything someone needs to know about Bitcoin. Are there any final remarks before we wrap up this interview that you'd like to leave with our viewers?
Yeah, I would say that Bitcoin's like electricity. And you could imagine in 1900, if someone said there was got this new thing called electrical energy, you should figure it out. People would be afraid of it. I heard someone got shocked, to death, electrocuted. It burned somebody's house down. I'm not quite sure. I need a degree to figure it out. I'm afraid of it. I would say Bitcoin's like that. You kind of need to figure it out. It's a once in a lifetime thing. It's worth the investment to figure it out. If there's one thing you learn in the 30 years, you probably ought to learn Bitcoin. It is digital energy. And if you want to learn, there are lots of free resources online. You made a good start listening to this podcast, right? That's one way to learn on YouTube. Second, if you go to Saylor.org, we've got a Bitcoin for Everybody course that's free. We've got courses in Austrian economics that are free. Anybody can go take them. If you remember the words Bitcoin is hope, go to HOPE, hope.com. We've got a curated set of resources. It'll teach you everything you need to know. We've got 5 free courses on Bitcoin. They're all free. Pick and choose. One of them is taught by the chairman of the SEC right now when he was at MIT. We've got books. We've got all the leaders. We've got all the videos. We've got all sorts of reference materials. Everything's free. So go check that out. You can follow me on Twitter. I'm Saylor, Saylor on Twitter. And so I interpret news, like what's going on in the world, what the regulator said, what does it mean for Bitcoin, what's happening next. And so feel free to follow me. And Bitcoin is hope, right? You can make your life better if you figure it out. You can make anything better. It's fire, steel, electricity, oil, digital energy. It's a new thing. So don't dismiss it and don't underinvest your time because it, you need to give it the due it deserves. And it's a complicated subject, but one well worth considering, either for your personal well-being or for your company or for your government or your city or your endowment or your nonprofit organization. Everybody can benefit by understanding what this thing is and how to take advantage of it and be part of the ecosystem.
Wow. Well, thank you for your time, Michael. I will definitely link all those resources that you just mentioned in the description. I appreciate your time. This was super, super, super helpful. So thank you again, Michael, and I will stay in touch.
Yeah. Thanks for having me.
That's the only way they get in there. Because the kids are loaded with student loan. Oh, but he got an education. No, they screwed him with student loan debt. No, tell me that's not true. Just look at the contract of a student loan debt is the worst possible debt. As a professional capitalist, I wouldn't touch a student loan debt. I'd rather pick up a steaming pile of horse